For the time being, let's quickly shift our focus to the IT space. Nomura recently came out with a note saying that revenue growth for IT companies could improve marginally in the next financial year. And it's also saying that mid-caps will continue to outpace large caps when it comes to growth. We have Abhishek Bhandari, Executive Director, Technology and Internet at Nomura joining in. Abhishek, thanks so much for being with us. So interesting point, and you're saying that growth could eventually get better. I think you're saying 4.5% for large caps versus 3%. But before we come to the growth question, I also want to discuss the rupee question with you. Now, how are the active hedges at Indian IT companies? And when you talk about this 4.5% overall growth, have you factored in the rupee depreciation to this extent?
Hi, Survi. Good morning, and thank you for having me on your show. So on your rupee question, I think the math is typically 1% depreciation in rupee yields around 25 to 30 basis point improvement in margins for the IT sector. But that's a very short-term thing. Eventually, if you look at the long-term trends, the currency benefit is not kept by the IT companies. It's eventually passed on to the clients. As far as the growth number is concerned, that's the dollar growth, which includes the rupee movement.
1% depreciation of the rupee leads to 25 to 30 bips margin improvement, right?
That's right.
Okay. So if we take this into account, you're talking about next year, even a slight margin improvement. So can you just tell us what the range is going to be for the large cap space?
Yeah. So if you look at our forecast, we expect rupee on an average to, weigh around 89 rupees versus dollar compared to around 87.5 this year, which is why we are baking in closer to 30 basis point margin improvement for the large cap next year.
Right. Got that. Abhishek, so on the back of all of it, the IT, the entire space has been swinging up and down. I mean, there's a lack of clarity, really, right, in terms of whether, and some of the most divided opinion out there on the street. On one thing, everyone agrees that maybe it's a space which is kind of under-owned and has not done, well for a while. But beyond that, there is a big debate which is afoot. What kind of pushback do you hear from investors when you kind of sort of, pitch ideas from this space? Is it largely all centered around AI and what it'll do to growth rates?
Thank you, Prashant. I think, globally, the big narrative going on in the tech space is identifying winners versus losers. And, the whole investment globally seem to be, flocking into the winners circle. And IT services in general are perceived to be quote unquote AI losers because they haven't really participated in the AI wave so far. In fact, they are more on the negative side that, they're seeing some bit of deflation in their revenues because of accelerated discounting that they're forced to give to their customers. So I think the pushback generally what we get from the clients is, when will that perception of, IT companies being an AI loser change into the other side? And two, even X of AI, I think the sector is, kind of a low growth sector. Even assuming 3% going to, call it 4.5% next year is actually a low growth compared to some of the highs, investors have seen during the COVID period, especially. But having said that, I think if you look at the long-term cycles in the IT services companies, businesses are predicated on tech changes. Generally speaking, over longer term, they have benefited from the tech changes cycle because whenever the cycle changes, typically there is more spend happening on the newer tech because every enterprise globally wants to anchor themselves to the new tech where most of the innovation happens. This time is not going to be any different according to us. It's more of a timing issue. The delay actually has been longer than expected because the winners in AI is still not identified. Look, every month, every week, we are seeing the models getting better than the other. So it's very hard for the enterprises to, really to anchor to one particular, AI stack and go around with it. So I think it's a combination of, the ongoing innovation pace in the AI, which is still not giving the podium finish to the AI winners.
Yeah. Abhishek, so since we're running into market opening, sorry I'm rushing you, but so net, what's the call? For instance, there are two brokers in the market, and I can remember CLSA and Motilal very, very clearly. They came out with actually a contra-positive view on IT, saying that Indian IT services actually will start benefiting. They'll be great adopters of AI. We're not in the build-out stage, but adoption in India will perhaps, really come on top. What's your sense? And overall, are you still neutral on the sector? Or will you have a positive inclination now?
We are positive compared to what we were last year. simply because we think the narrative on AI is likely to get better from the IT services point of view. We are already seeing evidences of the the POC projects moving to point solutions, which is generally the start of AI spending. If you look at the commentaries from some of the bigger, global IT services companies like Cognizant, etc., they seem to be indicating start of smaller projects in AI, which I think is a good news. Even otherwise, if you look at the AI thing, the investments in application layers are going to start as the investors in the AI, which are typically the global large cloud companies, will have to start eventually monetizing their investments, and that's where the IT services companies will definitely participate. So we are more positive compared to what we were last year.
Abhishek, we had more questions, but running into market open, and we want to address what's happening with Keynes as well. Thank you for joining us, and I hope you come back for a slightly longer conversation. We were just getting warmed up. Thank you.